Thank you for joining us this Friday, the 8th of July. I'm Sophia, a market analyst with Bell Direct, and this is the weekly market update. In the first week of the new financial year, many investors have been rebalancing their portfolios and setting targets for the year ahead. It's also been a volatile week in commodities, and the RBA raised the cash rate to 1.35%, signalling further rate rises in the coming months. However, our local market has advanced 1.7% Monday to Thursday, with 7 of the 11 industry sectors posting strong gains. The market accelerated after the rate hike announcement on Tuesday, as the 0.5% lift was in line with expectations, so there were no big surprises. And while tech is usually quite sensitive to interest rates, this week tech has remained strong, gaining 6%. Meanwhile, materials and energy have declined the most, with a downturn in commodity prices. The oil market has experienced prospects of falling demand because of slow growth and signs of tight supply. Gold neared its lowest levels in 9 months this week, under pressure from a rallying US dollar, and iron ore and copper prices also dropped. As a result, miners and energy producers were the worst performing stocks on the ASX 200 this week, including GrainCorp, GNC, Lynas Rare Earths, LYC, and Coronado Global Resources, CRN. Meanwhile, family app Life360 led the broader tech sector. The stock has gained an impressive 28% this week, and it is one of Bell Potter's top picks for the new financial year. The tech sector is interest rate sensitive, coining the industry as high risk, as record inflation figures are highly likely to continue to provoke rate rises. They are typically growth stocks, meaning they have the potential for capital appreciation over several years and often have low earnings, hence trading at high price to earnings ratios. However, in the current market environment, the more attractive tech stocks are those that currently have reasonable cash flows and earnings. So considering the tech stocks with steady financials, Bell Potter's choices are Life360, as well as Technology One, TNE, and Nitro Software, NTO. 360 and NTO were also top picks last financial year, while TNE has been added to the list. Let's take a closer look at some other stocks Bell Potter have chosen across other industries. Another stock choice is Clue, CLU, an innovative online learning company that performed very well during the lockdowns when schools were closed. Looking forward, the company is capitalized to continue scaling the business globally, and have also recently acquired a company called CodeCamp to incorporate coding lessons, while looking to reshift focus to the after-school market. Also, healthcare is a good sector to consider with the volatility in markets currently, because like consumer staples, they are defensive stocks that should continue to provide stable earnings and consistent dividends irrespective of economic conditions. So one of Bell Potter's choices is Telix Pharmaceuticals, TLX. And the demand outlook in commodities this year has dampened. With the uncertainty in the current market, gold stocks are viewed by many investors as a haven metal. Gold stocks historically remain strong amid rising rates and the rising US dollar. It's also resilient in stagflation, which is when inflation and unemployment are higher while the growth rate is low. So gold is a good one to consider with the emerging risk of stagflation, and one of Bell Potter's gold choices is Capricorn Metals, CMM. Moving into energy, the oil market is also seeing some uncertainty in the near term amid accelerating monetary tightening, inflation, and supply and demand issues. In recent weeks, Australia has also seen high gas prices from thermal coal plant outages. Beach Energy, BPT, is Bell Potter's top pick. They believe BPT should continue to benefit from elevated crude prices in the short term. So there are a few trading ideas for FY23 for your consideration. As for what was highly traded by Bell Direct clients this week, the following stocks were both bought and sold: Worley, WOR, BHP, Wesfarmers, WES, ANZ, Woodside Energy, WDS, Brickworks, BKW, and Sonic Healthcare, SHL. Clients also bought into Rio Tinto, RIO, while took profits from Macquarie, MQG and CSL. And the most traded ETFs this week were the BetaShares Geared Australian Equity Hedge Fund, GEAR, the iShares China Large Cap ETF, IZZ, and the Vanguard Australian Shares ETF, VAS. And lastly, economic data to look out for next week. Well, on Tuesday, we'll receive NAB's data on business confidence for June, and on Wednesday, Westpac's data on consumer confidence for July. This will give us an indication of business and consumer sentiment considering the current cost pressures and rising interest rates. Then on Thursday, June's unemployment rate will be released, which for the past 3 months has remained at its record low of 3.9%. And that's all we have time for this week. I'm Sophia Mavridis with Bell Direct. Have a great Friday and enjoy your weekend.